Silver investors. On the surface, it looks like a nothing day. Silver is only down about 0.7%, drifting around $76.50, no crash, no explosion, just a sleepy red candle. But behind that quiet move, two huge forces are pulling in opposite directions. A Federal Reserve that is quietly killing the dream of early rate cuts, and a Middle East that is quietly marching towards the risk of a wider war. I'm OG John AG, and in this video, we're going to stay with that boring candle for a full 15 minutes and show why it might be one of the most important candles you see this month. We'll talk about how softer inflation, strong labor, and a stubborn Fed are pushing silver down, how US-Iran tensions are putting a floor under it, and why this kind of tug of war is exactly what you see before the market finally picks a side. Segment 1, today's move, a small red candle with a big story, 2 minutes. Let's anchor where we are. FX Street reports that silver XAG USD is trading around $76.50, down about 0.70% on the day, starting the week on a weaker footing after failing to extend its recent rebound. They describe it as profit-taking combined with investors reassessing U.S. monetary policy after the latest data. Key facts from the piece: silver around $76.50, down 0.70%, not a crash, just a controlled dip. Move comes right after a rebound failed to keep going, so the screen shows you. Nothing special, just a small red candle. But FX Street's headline already gives away more. Silver edges lower as Fed rate cut, hopes fade, geopolitical tensions persist. That's not a quiet environment. That's pressure from the Fed on one side and pressure from the world on the other. Segment 2, the macro backdrop. Inflation is cooling, but the Fed isn't relaxing. 3 minutes. Now let's talk about the economic backdrop that's squeezing silver. FX Street lays out the latest U.S. inflation data. CPI rose 0.2% month-on-month in January, down from 0.3% previously. The annual rate eased to 2.4% from 2.7%. On paper, that sounds like textbook good news. Prices are rising more slowly. Inflation is drifting closer to the Fed's 2% target. In a simple world, that should strengthen the case for rate cuts, make non-yielding assets like silver more attractive. But FX Street makes a key point. Markets are now more focused on the resilience of the labor market and the cautious stance of the Federal Reserve than on just one soft inflation print. In other words, inflation is cooling, but the jobs market isn't breaking, and the Fed doesn't trust that one or two soft numbers mean job done. So instead of saying, great, cuts are coming, the Fed is basically saying, slow down, we're not there yet. And that hesitation is poison for silver in the short run. Segment 3, no clear signal. What the Fed is really telling the market, 3 minutes. FX Street goes one level deeper and brings in the CME FedWatch tool. They note that the Fed is not providing any clear signal in favor of an imminent rate cut. According to FedWatch, traders largely expect the Fed to keep rates unchanged at the March and April meetings, holding the 3.50%, 3.75% range. That's critical. A few months ago, markets were pricing in early cuts, multiple cuts, almost a straight line down in policy rates. Now, according to this article, the base case is no cut in March, no cut in April. For silver, that does 3 things instantly. It limits the immediate appeal of a yieldless asset. If you can still earn decent yield in cash and bonds, you're less desperate to hedge with metals. It supports the US dollar because US rates stay relatively attractive. It keeps real yields from collapsing, which directly weighs on silver's valuation. FX Street's exact phrasing. This outlook limits the immediate appeal of non-yielding assets such as silver, whose valuation partly depends on real yields and the direction of the US dollar. So yeah, CPI cooled, but the institution that actually moves markets, the Fed, refuses to blink, and silver is feeling that. Segment 4, the dollar's grip, how currency is capping silver, 2 to 3 minutes. Let's stay with the dollar for a moment because FX Street does. They write that the broader market tone remains mixed between caution and risk appetite. There's been a modest rebound in the US dollar, which is weighing on dollar-denominated precious metals like silver, making them more expensive for international investors. So you've got a dollar that is not exploding higher but firm enough to cap upside. Global buyers who now have to pay more in their local currency to get the same ounce of silver. FX Street also notes something subtle but important. The upside for the dollar itself is capped by the expectation that the Fed will eventually ease policy later in the year. So the dollar is in a band, strong enough to hurt silver, not strong enough to completely kill it. This is the pattern you see in the price. Every attempt silver makes to push higher runs into that dollar wall and the no early cut narrative. Every attempt to push lower runs into something else, which brings us to the other side of this story. Segment 5, the war risk. US-Iran tensions holding up the floor, 3 minutes. If the story stopped at the Fed, silver might be down 2 to 3% today instead of 0.7%. But FX Street explicitly pulls in the geopolitical angle. They write that On the geopolitical front, tensions between Washington and Tehran remain a key factor. Media reports suggest the U.S. military is preparing for the possibility of prolonged operations against Iran in the event of escalation. Translate that. This isn't one stray headline. This is the kind of planning that assumes things could get bigger, longer, and more dangerous. FX Street notes that such a scenario could revive risk aversion, boost demand for safe haven assets, including silver. This is why silver is only gently edging lower. Every time the Fed narrative pushes it down, the war risk narrative puts hands underneath the price. Investors are asking themselves, do I really want to dump all my silver right when the US is wargaming a longer conflict with Iran? That hesitation shows up in the chart as a soft floor, not a raging bull, but not a broken market either. Segment 6, the battlefield chart, where bulls and bears are meeting, 2 minutes. FX Street doesn't give exact support and resistance numbers beyond the current price, but the structure is clear. Silver has failed to extend its recent rebound, meaning there was a bounce that now looks like it's running out of steam. The current dip is profit-taking in the face of a tougher Fed outlook. So technically, what does that tell you? The short-term bias is slightly bearish. Rallies are being sold into as long as the Fed stays hawkish. But there is a hidden bid from safe haven demand, especially with US-Iran risk hovering. So imagine the chart like a boxing ring. On the top rope, Fed, dollar, yields, no March-April cut. On the bottom rope, war risk, general fear, safe haven flows. Price is the fighter stuck between those ropes. It's taking body shots, but it's not on the floor. Segment 7, short-term traders, how to survive in this tug of war, 2 to 3 minutes. If you're trading silver on short time frames, not stacking, FX Street's piece is basically a playbook for how not to get chopped to pieces. Here's how to use this environment. Trade with the Fed, not your feelings. As long as the base case is no cut in March or April, expect rallies to face selling. Don't chase every little green bar like it's the start of a mega rally. Keep one eye on the dollar. Modest rebounds in the dollar are enough to stall silver. If the dollar breaks higher on any surprise data or Fed comment, silver can quickly revisit lower levels. Respect geopolitical headline risk. Any sharp escalation between the US and Iran can flip sentiment in minutes. That means sizing smaller, using wider stops, or choosing to sit out during key news windows if you hate sudden spikes. FX Street's tone is almost like a warning. This isn't the clean trend environment where one narrative dominates. This is a two-way battlefield, and that demands discipline. Segment 8, long-term stackers. Why a 0.7% day doesn't matter, and why it does, 2 to 3 minutes. Now, if you're a long-term silver stacker, you care about something very different. What matters to you is not whether silver closes at $76.50 or $76 today. What matters is why it's here at all. FXS Street tells you, we are in a world where inflation is easing but not conquered. The labor market is still tight, and the Fed is nervous about cutting too early. At the same time, US-Iran tensions and broader conflict risk remain in the background, never fully resolved. That world has a few characteristics. Central banks are still juggling credibility, growth, and debt. Political risk and military risk are part of the daily backdrop, not rare exceptions. Safe haven assets like silver might not moon every week, but they never go out of business in that environment. So for a stacker, a small Fed-driven dip is either a non-event or a chance to add a little more metal at a slight discount while the market argues about whether the first cut is in June or September. The fact that silver only edges lower instead of tanking, even when the early cut fantasy is dying, proves one thing: there is still fear in the system. Segment 9, the bigger narrative, Fed versus fear, and silver as the scoreboard, 2 minutes. Let's put the whole picture together. FX Street's article is not just a price update. It's a snapshot of a bigger war. On one side, Fed policy, interest rate expectations, dollar strength, the slow, grinding admission that cuts won't come as fast as the market hoped. On the other side, US-Iran tensions, the risk of prolonged military operations, a fragile global environment where investors will not fully abandon safe havens. Silver, sitting at $76.50 and down just 0.7%, is the scoreboard where both sides are being tallied in real time. Every tick down whispers, no early cut. Every bounce up whispers, don't ignore the risk of escalation. So when you look at today's candle, don't say nothing happened. Say two forces fought, and for now, the Fed is ahead on points, but fear is still in the ring. You've been watching John AG here, and I'm OG John AG. If this helped you see how even a small red day in silver can hide a full-scale battle between central bank narrative and geopolitical risk, hit like, drop a comment telling me which side you think will win, the Fed or fear, and subscribe with all notifications on, because when this balance finally breaks, you're not going to get a polite 0.7% warning first.